Welcome everyone to a GBP Weekly Outlook breakdown. We're going to discuss the fundamental and technical aspects of the trade, targeting any position trade, swing trade, day trade, and even scalp opportunities. I will touch on a few key points in this breakdown that I think are the most important, and then of course the SharmaFX team members, you will always receive the first and daily trade updates and entries throughout the week. So let's go ahead and dive into the GBP fundamentals that we have here. Starting off, we have some Brexit related news here. The first key point is Northern Ireland here again, where the EU is taking legal action, where they're looking into taking legal action against the UK. And we saw the pound reacting to that by pretty much retracing a little bit, showing us a bearish close last week. And Northern Ireland has been a sensitive topic for the UK and for the EU in the Brexit process. So a lot of times, even in the Brexit process, we've seen the two parties disagreeing on Northern Ireland, certain aspects of Northern Ireland. And also there was one point where it was pretty much said by some of the officials that we may not have a Brexit deal if the two parties did not come to some sort of a middle ground when it comes to Northern Ireland. So even though we do have a Brexit deal that went through and both parties did come up with an agreement, we're still seeing the topic of Northern Ireland come back into the post-Brexit talks. So any news related to Northern Ireland, you definitely want to watch out for that. Next up, we have the European Commission president threatening to withhold any vaccine exports to the UK. So the UK has been one of the most successful countries in vaccine rollout so far, and this may become an obstacle for them to continue their progress if they're not able to find another source or a resource to compensate for some of the vaccines that they may lose out on if the European Commission president does really go through with withholding any vaccine exports to the UK. Next up, we have UK's crisis ground zero is ready for reconstruction. So pretty much we're seeing some of the retail sales and services PMI and that kind of data picking up again. So we are seeing that people, after getting their vaccinations, so one of the most successful vaccination rollouts, with more than half of the adults having the vaccine protection. And now we're seeing the first expansion of UK services for 5 months, and we're seeing people still going out and try to become as normal as possible, get back to that as soon as possible, as much as possible, to increase their spending in the economy and speed up that economic activity that we need to see throughout the economy. So not just in the UK, but in every economy, the consumer is the center. The consumer activity matters the most, because if people are going out and spending money, then you're seeing an expansion in the services industry, you're seeing an expansion in manufacturing industry, you're seeing an expansion in banking, for example. So the consumer is really the core of the economy, and we're seeing that a lot of the consumers, they're picking up their activity in the UK, which is a really good thing. But again, the Bank of England did contain their sense of optimism despite all the good data that we're getting so far, by saying that the outlook still remains unusually uncertain. So you still want to watch out. You still want to kind of stay on your toes and be cautious of any negative news that you may see, because we have been very, very bullish for GJ for quite some time. And so it is time that we come back and correct some of those moves before continuing back up. So this article here kind of taps into what we have touched briefly on with the European Commission president threatening to withhold of vaccine exports. So here, by the end of July, the UK has a target of hitting that halfway target of offering their first dose to most of their adults. And right now, more than 26.8 million people have received their first dose in the UK, with 2.1 million still getting both shots, right? So a lot of people already have their first protection, their first dose, and now people are getting ready for their second dose. But there is a warning that the British government has put out, that there could be a delay, a 4-week delay in supply from the end of March in terms of vaccine distribution. So it's not shocking that pretty much both of the news kind of come out at the same time, and that's probably what the UK government is trying to be cautious of at the moment as well. So we'll see if there's any more vaccinations that the UK government can get hold of to make sure that their progress keeps going despite this little hiccup that they're getting from the EU. Let's go ahead and move on to Forex Factory. So this week we do have a ton of news coming out. So low impact news, we do have a lot of MPC members speaking. We have 2 MPC members speaking on Tuesday, and then you have Governor Bailey speaking as well on Tuesday. You have the unemployment rate coming out. So if you're trading London session on Tuesday, I would say be pretty careful. You're probably going to see a little bit of volatility coming in, especially around the time that Governor Bailey starts speaking. So you want to be very careful about 30 minutes before he starts speaking, about 30 minutes after as well. Let the market price in any volatility that may come in. So he's going to be participating in a panel discussion titled Unlocking Investment for Net Zero at an online event hosted by The Economist. So I'm pretty sure if you click on latest release, or if you just go onto Bloomberg or Yahoo Finance, they're probably going to have a link for you to watch and participate in this as well. So that's about it for Tuesday. Let's move on to Wednesday. You have CPI news coming out. You have PPI and then RPI as well, right at London Open. And then you also have the manufacturing PMI and services PMI coming out as well in the middle of London session. So that's another thing that you definitely want to watch out for if you're trading Wednesday as well. Be pretty careful. Make sure you're waiting for your confirmations, and then you're taking your trades, and you're not just looking for any impulse trades or getting any FOMO or anything like that. Coming into Thursday, you have Governor Bailey speaking again in the middle of London session. So another thing that you want to watch out for. And then you have the realized sales. So a lot of these, if you look at any services industry or sales, or for example, services PMI that we have here, even RPI and PPI and things like that. A lot of this data kind of leads up to one another. So if you can kind of understand how do they all play into each other, I think you'll be able to predict what kind of numbers can you see, and then how does that align with your trade as well. So coming into Friday, then you have the FPC statement. This statement is very important, even though it's a yellow folder, because it's among the primary tools that the FPC uses to communicate with investors about financial policies. And so you definitely want to watch out for this as well. And that's about it in terms of fundamentals from GBP. Let's go into the technical aspect here. So from a technical aspect, you're going to go and mark up the major support resistance levels. So we have that major support where price has tapped into it several times and made the all-time low down here at 119,500. Price pretty much dumped after this point after grabbing that liquidity, and then next candle just follows down. That entire year it was very, very bearish at that 233,100, continuation down. This is that financial crisis, that 2008, 2007 financial crisis continuing down. We come back up. This is pretty much when Brexit was introduced. And this is the 186,700. This is when it was pretty much introduced to the people, and then we started seeing some votes and things like that going on. But also notice how this is the same exact level where price made a support before continuing back up. So even with coronavirus and all of that, we have not come back down to revisit the lows. If anything, we've kind of tapped into this level, grabbed some liquidity. We're sitting at a support level, which also seems like, price is now starting to push out of some sort of consolidation at 139,700, pushing up. So if you're looking for any position trades, then you would wait for price to break above this resistance right here. So this is the same exact thing, that little retest candle, continuation down, and then same exact thing, retest, and then we saw price consolidating right into this zone. So if you're looking for a position trade, you would wait until price breaks above 152,300, continues up, and there's essentially nothing stopping it from pushing up for about 3,000 pips here, which is that 186 level. So there's really nothing stopping it. And as you drop down to lower time frames, you could look for partial levels. You could also look for scaling levels. But as we drop down to lower time frames, definitely pay attention to how price is reacting to 152, 300. So I'll make that red, and then how price is reacting to this level here as well. Of course, as you drop down to lower time frames, you can absolutely adjust these levels according to how price is reacting on that certain time frame. So that's the yearly. We're getting ready for a nice push up. We have grabbed liquidity from down here, so we're getting ready for some bullish moves. But again, since it's a significant level and we are starting to see some nice fundamentals coming out about sales picking up, about people spending more money, about people in UK trying to get back to some sort of a normal life and trying to work around some restrictions. We also have news about the UK economy opening up. So we had schools opening up there, and then there's news about businesses opening up closer to summer, and also people getting their second dose of vaccines. So we have a lot of optimism that's pretty much setting us up for this nice move up. So if you look at the quarterly, that's exactly where we made that support. You see a little bit of consolidation by like 4 candles. That liquidity grab from up top comes back down, taps into this area. So as you notice, price doesn't really break above until 2012, when we finally continue up with a lot of volume, and we're seeing some formation of the same exact thing that's happened here happening right now as well, where price is creating support right into this level, grabbing that liquidity, and we've been quite bullish now, tapping into that minor resistance level. So now this is another key point. So you could also draw a trend line to kind of visually see this. But here, if price continues pushing above this level, then this is going to be a break of that huge bearish trend line that we've been seeing for quite some time. So when you're trading this, even for a position trade, you'll always want to see a break, a retest, and a continuation up. And now that we've targeted some minor levels, you could target some partial levels right here. As price continues up, after giving your retest, you can look for another entry coming up to 186, and then maybe eventually ultimately tapping into 233, 100, all the way up top there. So we are at a very critical level at the moment. This is pretty much where price is either going to reject this area or give us some sort of a fake out and then continue back down, still retesting these levels, or it's going to continue pushing up. And for that, we need to see some of those strong fundamentals coming out of the economy opening up, the businesses opening up finally, and we need to start seeing some strong fundamental data coming out as well. Another thing is I personally only use the trend lines to visually see any movement, but I do not use that for any sell or buy confirmations. So looking into this on the monthly time frame now, we see that price is tapping into this resistance zone. And if I extend it over, we'll see how price keeps reacting into it over and over again. And then if you extend it further back, the same exact thing. So this is a level that price keeps rejecting as it drops down, comes back up. You get a little fake out, continues back down. And right now this month, we tapped right into that level, and it seems like we're rejecting it right now as well. So as you can see, for the past couple of months, we've been super, super bullish. And whenever there's a huge bullish move or a huge bearish move, just know that there are going to be some pullbacks to correct that move to continue pushing up. So what are some key levels that price broke out of here but did not retest? So first of all, that we can see is right about here. So that is a level that price rejected several times, finally broke above, and then now we see consolidation right around that level here again. So we broke above and the next candle just started pushing up. So once that's broken and the price continues down, so let's go ahead and move that to a whole number. So 148.200. Once price starts breaking that, we have a nice move coming down. Let's say first of all, kind of that resistance, which is that support for consolidation for about 400 pips. And then if we see maybe a deeper pullback for about 600, ultimately tapping into 800 pips. So I would if there's enough fundamentals, bearish fundamentals, then I would wait for that 148,200 to be broken and then continuation down for about 400 pips personally. And then look for some sort of support to be formed here before that nice pull up, and then look for the longer term buy opportunities. But if you're in for a buy opportunity, then definitely wait until 152,300 is broken, and then you have some levels here that you can take partials at. And then continuation up. As we drop down to the weekly, we can see how last week we closed bearish. This week we already started bearish, opened up very, very bearish, where the candle did not even try going up. It made no top wick. Instead, we just started breaking the lows. So at this point, if you're looking for a swing trade, then I would wait for price to reject this area and then continuation down. Even in that continuation down, let's say price pushes up to make a top wick later in the week, continuation down, you have about 200 pips, and then ultimately to correct this entire bullish move that we've been seeing is about 1,000 pips. But even then, you could target some of these minor levels, for example right here, where price has been tapping into consolidation areas, kept rejecting this level over and over again, as you can see, and then when it had a little bit of fake out, consolidated right below it, rejected, and then a huge meltdown. So as price makes a top wick, rejects this zone here, continuation down for a total of about 500 to 600 pips depending on your entry, and the rest would be runners. As we drop down to the daily, we can see that price consolidated a little bit here for a couple of days, almost a week, and then continuation down. Today, we just continued down with a lot of bearish volume where the price did not even try testing bullish at all. So for me to take any trade here, any swing trade, I would want price to kind of clear out this area as a confirmation, or even make a top wick rejection to continue back down. So if this daily candle, for example, closes bearish and the next one makes a top wick rejection, I think that's a very nice sell opportunity coming down for about 200 pips for the rest of the week, and even tapping into potentially that 145 or 144 500 level. Looking at the 4-hour, use that for confirmation. So as you can see, we've been very bullish for quite some time, and once we break below this zone, it's going to be a break of this minor structure that we've been having for a very long time here again, since December. So it's going to be a break of that minor structure. We're going to come back down, tap into this 148,200 level, 148,500, 148,200, any of that. Essentially, I'm targeting this entire consolidation area right here. So target that, and then we want to see how price reacts. I would personally take partials at this level, trail my stop loss, and then as price breaks below, I would wait for another retest to continue down to that 145 level. Next area of target being this entire consolidation area right here. Dropping down to the 2-hour, same exact thing. So I personally don't use the 1 hour. I like to use the 2-hour time frame because it's right in the middle of some of those lower time frames like the 30-minute, 15-minute, and also kind of in those intraday higher time frames of 4-hour and daily. So on the 2-hour, I would like to see a pullback. So this is when today the candle started forming and the market opened up. So we've been quite bearish during this entire time in the past couple of hours. I would like to see a pullback, rejection of this area, and then continuation down, and take those sell opportunities from up top here all the way down here. Same thing on the 30-minute, we're tapping into this zone here. Seems like we're rejecting it, and now we have price that's kind of struggling to continue pushing down. So maybe we get a pullback up anywhere in this area, 150, 150, 900, or 151, any of those up top here, and then a continuation push down, and I would look for some sell opportunities there. Or if we continue this bearish movement down in London session and we break below this zone, then I want to see another retest to continue pushing down and still take advantage of about almost 200 pips here again, about 190 pips. So that was a quick breakdown of GJ from a fundamental and a technical perspective. If you guys have any questions, feel free to reach out. And again, SharmaFX team members, you will be getting the updates here as we see some nice entries.